countdown somewhere. Yeah, let's see what the countdown looks like. 10, 9, 8, 7, 6, 5, 4. This is Jim Munchback. We're about to get started with a new lecture in personal finance. So let's get started. I'm going to jump on over to the Zoom room. I guess I don't need two cameras going. Maybe that's kind of cool. I think I've got a couple of issues, which I always have a couple of issues going on. Let me get rid of that camera. We'll go with this camera. It doesn't look all that great at the moment. Let me see if I can fix up a bit. Camera A, fade level, there we go. Sorry about that. I'm doing a little housekeeping while I'm applying to all scenes, while I'm getting ready. So I have some folks waiting over at the in the Zoom room, so let me go ahead and admit everyone. Good morning, everyone. Hey, Gavin, good to see you. Irene, good to see you. Welcome back from spring break. I hope you guys had a great spring break. I did, kind of. But I'm glad to be back. Can you chat in, please, and just let me know you can hear me. And also, if you have any questions, now would be a great time to ask your questions. Can hear you. Okay, thanks, Gavin. I appreciate it, man. Did you have a good spring break? Hope you did. I think I got your assignments graded. I took my sweet time about it over spring break. I got your text or email asking when I was going to do that. Sorry about that, but I took a little time off for spring break. But I'm back now. We'll get things going. So I'm going to jump right in. It's 10:05 a.m. I got a little bit of a late start, and I want to make sure that we have everything going. So here we go. Let me just get rid of this and see what we got on the screen. Okay, we're in I think this is week 10. I'm going to be talking about your next assignment, which is assignment number 10. I believe it's called Asset Allocation in Canvas, but I'm going to share with you what is in this week's assignment. I'm glad to hear that was good, Gavin. New Jersey, I'm sorry about that, bro. The taxes in Jersey are pretty high. I have a nephew, who just moved from Jersey to Washington State. Anyway, that's cool. Thanks for sharing. Okay, so if you're watching on YouTube or Facebook, please be sure to leave a comment. Let me know you're listening. If you're a student here in personal finance, then this is for you. This is week number 10, the week following spring break. So we have had a week off, and that's always a little disruptive, but glad to hear you moved to Texas, Gavin. So I'm having a little chat with Gavin. If you're watching on YouTube or Facebook, you don't see the chat. I will fix that one day. But anyway, let's get started. So in this assignment, we're going to move on from the last couple of assignments. Before we do that, though, before we jump into this week's assignment, which is we're going to do a retirement calculator. I'm just going to tell you real quick what you're going to do in this week's assignment, and then I'm going to do a little review because we covered a lot of ground over spring break, and I want to make sure that I at least highlight the topics and the concepts that were not really. We didn't have normal lectures. We didn't have a normal Zoom meeting, so I want to cover that. So I'll do a little review today, but before I do the review, I want to just give you a snapshot of what you're going to do in this week's assignment. So we are moving really rapidly towards the end of this semester. I don't know if you know that, but in terms of this course, in terms of your capstone assignment, we're moving quickly to your capstone assignment. And so the work that you do this week will be very helpful in terms of you preparing your capstone assignment for completion. So I think I've mentioned this multiple times throughout the semester, but let me just remind you that each and every assignment that you do where you work in your RightCapital planning portal, Bayrock. And it's a Bayrock branded piece of technology that you're working in to create your financial plan. You're going to be creating a comprehensive, holistic financial plan based on a few details that we changed. For instance, we made you 10 years older. And so you're going to see in this week's assignment, as you do your retirement calculator, you're going to use an online retirement calculator to just basically figure out how much will it cost to retire. And I don't care which retirement calculator you use. These are the basic questions that any retirement calculator will answer. And so I want you just to go find a retirement calculator. You can Google that. You can find one. I gave you a link below to NerdWallet. I like NerdWallet. They're a great resource if you're looking for personal financial, blog. They're great. They provide a lot of great information. So you can use whatever retirement calculator you want, but I want you to come up with, when you do a retirement calculator online, by the way, it's like a mini micro site that gives you your retirement projections. Now, you have to tell the retirement calculator a few details about yourself. For instance, you have to tell it your age, your birthday. So I want you to use the pretend birthday where you are 10 years older. Okay, so don't miss that. When you do this assignment, and you do the retirement calculator, don't put your actual birthday in. I want you to use the birthday that makes you 10 years older. So you're going to have to use just subtract 10 years from the year you were born and use that year. And then, plug in your income based on the fact that you've got this dream job that you got after you retired. I mean, remember, that's how we're setting up your financial plan. So what I want you to do with this retirement calculator is I just want you to, run it. It's super simple, super fast, and you'll get results immediately. Naturally, you'll grab a screenshot for your assignment to show me what you discovered, what you learned about your retirement calculator. What is it going to cost for you to retire? How much do you need to save? How much return on your investment are you assuming? When did you start? How much are you putting in? How much do you expect to get out in terms of cash flows? So all of those, depending on the retirement calculator you choose, all of those questions will be asked, and it's super simple, very straightforward. It will take you just a couple of minutes. But here's the thing. When you do that retirement calculation using whatever retirement calculator you decide to use, you're now going to have a number that you can compare to your RightCapital plan. So that's what I want you to be looking at. Here's just kind of a snapshot. I think I have another snapshot of, so this is I just grabbed this, so don't worry if yours doesn't look exactly like this, but you're going to have a percentage when you go to, in your RightCapital plan, you'll go to retirement and you'll click on the little analysis tab and you'll get a percentage, a probability of success. You'll also get an ending value. And by the way, for those of you who are paying attention, who don't want to get deductions on your assignments, and especially your capstone assignment, that amount right there for Billy is $15 million. That's his ending value. That's a lot. Now, if you know anything about Billy's plan, and you don't really need to, but Billy and Sally have a ton of debt. So they have a really jacked up financial plan. So I just use them as a kind of a sample so I can grab screenshots and whatnot. But just so you know, if you're paying attention and if you don't want to get a deduction in your capstone assignment, I'm pointing out that is a huge number, 15 million. And if this were your financial plan, you would definitely want to give me some comments about why that number is so high and what you've done to check your numbers. So one of the things you can do to check your numbers is do this retirement calculation. That's a big part of this week's assignment. So I think if I click on this link, yes, that will take me to NerdWallet. So now you are seeing the actual I'm not going to log in. You're seeing the actual retirement calculator. And again, you can use whichever one you want. But this has your current age. And again, I want you to pretend you're 10 years older. Your annual pre-tax income, and that is the income that you're pretending you're getting now because you nailed that dream job. The rest of this, current retirement savings. So let's see what this is, a total of all your retirement savings, including your 401k and IRA balances, plus other savings earmarked for retirement. So one of the things I want you to do in this week, in terms of updating your financial plan in RightCapital, I want you to create a data card for your 401k. It's going to require you to do a little research to figure out how much are you going to be contributing to your 401k. And so that is an account, it's a data card that you currently don't have in your financial plan. But it is a very important data card. Your 401k savings is where you're going to plug in how much you are actually saving for retirement. It's a big part of your capstone assignment. So go ahead and add that this week. And when you do your retirement calculation, you're going to want to also include that. Now, here's the thing. This is inside information. Pay attention. This is going to make you look really good when you do your assignment. So if you are 10 years older than you actually are, and if you've had this job for 10 years, which you're pretending that you have, then that means you've been able to make contributions, 401k contributions, for 10 years. And so you get to pretend that you've been working for 10 years, and you get to pretend that you've been contributing to your 401k account. So that means you have to come up with a number. How much money do you actually have in your 401k account? And I'm not going to tell you how much you should have in there, but this retirement calculator is going to ask you that question. And so just do a little basic math. I don't give you much, I'm not going to deduct points if you only contributed 5% to your 401k when you could have contributed much more. That's up to you. You get to figure out, pretend, do a little math, and figure out how much do you have in your 401k account today, that pretend account, very important, even though it's not real numbers. These are going to give you, these numbers in this account that you create in your RightCapital plan, it's going to give you a helpful tool, a model, if you will, so that when you play with asset allocation, which is another part of this week's assignment, when you play with that, if you have some actual assets in your account, then when you change the asset allocation, you're going to magically see how that impacts your retirement outcome. And another thing is monthly contributions. Let's see what that says. That says this is how much you should contribute monthly to have enough savings for your expected retirement budget. Changing your retirement age or retirement budget will change this number. So again, monthly budget in retirement, this is where you're going to grab that, remember that detailed view in RightCapital. So this is a good little tip. If you're unsure, start with the recommended 70% of your projected income at retirement at age 67. So if you're unsure, start with the recommended 70% of your projected income at retirement age. So if you're making, let's pretend you're making $100,000 now in this pretend job that you have, and you fast forward the clock to your older than me. I'm not 67 yet, but you just have to come up with what kind of income do you think you will be receiving around the retirement age, your retirement age. 67 for me, for people my age, is the full retirement age. So I really won't even think about retiring before age 67 because the benefit amount for me for Social Security is much higher at 67 than it is at my current age of 62. I could retire at 62, but I would take a big hit on that benefit. So what I want you to do, what they're suggesting, which is a great suggestion, I've been telling you and asking you and encouraging you each week, almost every week, to pay attention to those expenses. And I know you have no clue what your expenses are going to be once you graduate and you have a house and you have a family and you're living on your own with no parental support. So I'm asking you to be thinking about that, to pay attention, to start to understand, what does it cost for Wi-Fi? What does it cost for a phone? For insurance, for gas, for all the things you're going to have to be spending money on. And I'm asking you every week to pay attention to those details in your detailed budget in RightCapital. So in this super simple retirement calculation, they're just saying, here's a suggestion. Okay, so you could use this suggestion today and say that you're making $100,000 in this dream job that you nailed. Well, then, based on this little factoid, you could say, okay, if I'm making $100,000, I'm spending $70,000. So you could plug that into your RightCapital plan, and that would be great. Because as you're going to see, if you have a huge number at the end of your plan and it says you are going to retire with $1 billion, it's partly because you haven't given your plan a good idea of what your actual expenses are going to be. So again, this retirement calculator exercise is one way for you to kind of double check the work that you're doing in your own financial plan. Does that make sense? So that's what we're going to do. Other retirement income, optional, probably not. I would leave that blank. The more you add to soup up your plan, the more complicated it will get for you. You can soup up your plan or do whatever you want to your financial plan after you complete the capstone assignment. So right now I would keep that blank in both your retirement calculator and in your financial plan. So I hope that helps. Now this is kind of the number, excuse me. This tells you what you're going to need for retirement and how much you will have saved by the time you reach retirement. So those are two good numbers that will help you make comparisons. So again, this is Nerd Wallet. You can use whatever retirement calculator you want to use. I do not care. Let me see if I can go back to where we were. So again, that link is in the assignment. If you're watching this on YouTube or Facebook or LinkedIn, there should be a link in the comments, in the description, that goes to this post that I'm looking at right here. This is just so everything I talk about is here in this post. So let's get back to, so that's the assignment this week. You're going to do a retirement calculator. I don't care which one you use. Then you're going to go into your plan and you're going to tweak your asset allocation. I'm going to let you do that. And if you have questions, then you may want to reach out to someone in GroupMe to see if you can get an answer before you reach out to me. And by the way, before I do a little review, I'm going to review a couple of things that we covered over the last couple of weeks. But before I do that, I want to talk about the tutorial request. So this is going to be, by the way, I'm going to talk about how can you request a video tutorial to help you address your specific questions and concerns as you move forward to and prepare for your capstone assignment. I want to make certain that all of your questions are answered. So I'm happy to do a special dedicated video tutorial to answer your questions. But I'm not willing to do that if you don't follow these instructions. So they're on the screen, and I'm going to talk about those in just a second. And to make it even more helpful, I'm going to make this week's secret class collaboration. So this week's secret class collaboration is specifically, how do you ask me for a tutorial? So I continue to get questions from students who reach out to me just kind of randomly at 11 p.m., midnight, 2 in the morning. Oh, I don't know how to do this or that in my financial plan. Can you help me out? I'm trying to finish my assignment. Don't expect a reply from me, okay? If you're asking me those kinds of questions, I consider those kind of lower level questions. And just like if you were working at a job, you probably, maybe you don't know this if you've never worked at a job, but if you were working at a job and you needed an answer to a question, a low-level question, you would not ask your supervisor. So I guess I'm kind of sort of like your supervisor as the facilitator for this course. But what you would do is you'd reach out to a coworker and you'd say, hey, tell me about how are we doing this? And that's how you would get an answer. And if you didn't know that, that's worth a lot to know that. Because if you go right to your supervisor every time you have a question, a low-level question, then your supervisor, when it comes time to evaluate your performance so that you can hopefully get a raise, your supervisor is going to be like thinking about all the times you reached out to your supervisor with all these low-level questions that no one else was asking your supervisor except you. So if you're one of those students who likes to reach out and ask low-level questions to your professor, I'm just going to try to encourage you to not do that. Reach out to GroupMe. If you don't get an answer in GroupMe, then feel free to reach out to me and I will be sure you get an answer. But this specific class collaboration secret for this week's assignment is all about how do you ask for a special dedicated video tutorial to give you all the answers you could possibly need for your capstone assignment so that you nail it. So here's what I'm going to ask you to do. Send me an email. That's first. You could send me a text message, and I would encourage you to send me a text message if you want to follow up. But the email is easier for me to save, and I'll capture that and I'll save it. And then when I have time, I'll create your video tutorial if you send me an email. And if you include screenshots. Now, screenshots, what do I mean by screenshots? I mean screenshots. Like if you're struggling with your credit crush component, like your debt strategies, if that's where your question is in your financial plan, let's say you have $1 billion savings in your debt strategies, and you know that's just redonkulous. And so that's your question. I want to see screenshots from your financial plan. In that case, I'd want to see the payments that you're making. I'd want to see lots of screenshots so you can show me what your problem is, and so that you can show me the specific question you want me to help you answer through this video tutorial. So use screenshots to do that. Just grab it. You can put it in a PDF. That'd be a good way to do it, and then email me the PDF. But I want to know the specific questions you have, and I want to know what have you tried. And that's where those screenshots can come in handy. Like, again, in the credit crush example, if you have $1 billion of savings because you have something weird with your credit, and it's easy to do. It's very common, but I want you to be able to pay attention to it, understand it, and be able to make corrections. So show me those screenshots and show me what have you tried? What have you done to try to solve this problem, answer this question? What have you done in terms of researching? And in this case, I would say for the purpose of this secret class collaboration, one of the things that you should have done before you email me, even for a tutorial, is to reach out to GroupMe to try to get your question answered. So if you did that, if you reached out to GroupMe and you got a little bit of your question answered, but you still have more questions, tell me that in the email. I want to know that. And then finally, I need your permission. Okay, if you send me your stuff, what I'm going to do, if you send me a question and you ask me for a specific video tutorial to answer your questions, I'm happy to do that. But the way I'm going to do that is I'm going to open up your plan in RightCapital, and I'm going to record what I'm doing to find the answers inside of your plan to answer your questions. And I'm going to create a video, a tutorial video, and I'm going to post that in our playlist, and I need your permission to do that. So you need to tell me I have permission to do that. Otherwise, I'm not going to share your work. There is no really personal information inside of RightCapital. I don't know if you noticed that, but RightCapital is very sensitive about personal information. So there's no social security number in RightCapital anywhere. And your name will be shared, your birthday will be shared, but it's a fake birthday, so it shouldn't really matter. But anyway, that's what I need from you if you want me to do a video tutorial, and I'm happy to do that. And that is, again, that is this week's secret class collaboration conversation. So tell me what you think about that whole video tutorial process. Let me know you understand it. So even if you don't have a question, that is this week's secret class collaboration. I want you just to kind of highlight, briefly describe that process for me, and then do that in a conversation that you post either on YouTube or Facebook or inside of Money Study Group, and then grab that screenshot for your assignment. Okay, cool. Everybody got that? Hopefully that's clear. So that is this week's class collaboration. So, excuse me. Now I'm going to jump into, I talked a little bit about the 401k, that data card that you need to add to your financial plan. So I talk about the 401k is something I call the perfect investment. So I want to talk about that for just a minute. If you have, now I usually talk about this multiple times in the semester, but because of spring break, I'm not sure I've nailed this for you guys. So in my book, Make Your Money Count, I have a whole chapter, Small Steps, Big Payoffs, I think is the name of that chapter. But one of the small steps that has a huge payoff is what I call the perfect investment. And it's just amazing to me how many people miss it, how many people don't take advantage of the perfect investment. And so the perfect investment is a 401k account. Now I say 401k because most companies, most of you graduate from a business college, go to work for a big corporate, company. And so the 401k, that's 401k is actually the paragraph number for the IRS code. So that's all that means, 401k. And in that code, it tells you the rules, boundaries, and limitations for how you can take advantage of this tax-advantaged account. So the second law of personal finance is the law of tax-advantaged investing. And it starts with the perfect investment, which is your 401k. And the reason it's the perfect investment is because it's the only investment on the planet where you put money in, and if you have a company match, they match your contribution. So it's like you automatically, if you put $10,000 in to your 401k, you automatically have $20,000 at the end of that year. That's awesome. So that's the tax advantage 401k. The company match is the reason that I call it the perfect investment. But it's also tax deductible, which means if you put 10 grand into your 401k, you get a $10,000 tax deduction, basically. It's tax deductible. You do pay for that. You pay that. So for me, I have a 401k that's now an IRA. It was rolled over to an IRA, and I can take money out of that account now with no penalty because I'm over 59 and a half. So when I take the money out of that account, it started as a 401k. When I left that company, I rolled it over to an IRA. Now it has lots of money in it. And if I take that money out today, I pay the taxes. It's as if I take 10 grand out of my IRA, that used to be my 401k, if I take money out of that account, that money that I take out, pretend I take out 10 grand this year, the IRS says, okay, you just made $10,000. So that's how that works. It's tax deductible, it's tax deferred, but you do pay taxes on it. But I call that the perfect investment. And again, this week, part of your assignment is, if you haven't already done so, is to add a 401k to your financial plan. And that means you need to add a savings component. So you'll go into RightCapital and you'll add, am I saving? I should show you how to do that probably. I'm going to see if I can show you how to do that real quick. So just so that you see it, let me log in before I get rid of my little screen there. I'm going to jump in, log in, and go to Billy's plan just so I can show you what I'm talking about. Face ID, there we go. Sorry, I'm trying to log into my iPad while my microphone is in the way. Give me a second. Sorry. I'm just going to jump into Billy's plan and I'm just going to show you. Open Billy's plan. Okay. Excuse me. So let me get rid of this perfect investment. Let me get rid of this week's class collaboration. And now you see I'm in Billy's plan. So when you add the 401k to your plan, there's two things you're going to have to do. First, you're going to go to Profile, and you're going to hit Savings. So you see that Savings, and you see Billy has a 401k. You're going to have a 401k. The way you do that is you hit Add, you hit 401k, and then you set it up. And I'm not going to tell you how to set it up. I want you to be thinking about all of the pieces of data that are in this one data card, and I want you to do your best and set up a 401k in your account. So I'm going to delete that one because Billy already has a 401k. So that's the first thing you're going to do, is you're going to tell your financial plan that you are actually saving money in a 401k. And so when you add that data card and you give it instructions, that's what your financial plan will be seeing, is that you have committed to do this perfect investment where you're going to be making this contribution to your 401k if you get paid every 2 weeks, the money comes out every 2 weeks of your paycheck and goes right into your 401k. And eventually the company matches that. So whatever asset allocation you choose in your 401k, it's going to be invested in that way. So that's what I want you to be prepared to do day one when you get your first real job. I want you to know, what does the company match in the 401k? And I want you to know that you're going to contribute at least that much. So for example, if you worked for Shell, I think Shell matches 8%. They used to, I think. But anyway, if you make $100,000 and you get an 8% match, that means $8,000 a year. Shell is going to match your contribution. So you absolutely want to contribute at least $8,000 to your 401k so that your company will match it another $8,000, which means at the end of the year, you will have how much in your 401k? Go ahead and put that answer in the comments and I'll give you, well, I guess I'm not going to give you any extra points, but I would like for you to know that if you make $100,000 a year, and your company matches 8%, it's a no-brainer. You definitely want to contribute to your 401k. So day one, you say, yes, I want to contribute. How much are you going to contribute? At least how much? If you make $100,000 and they match 8%, 8% of $100,000 is $8,000. So you contribute $8,000. And then they match it. How much do they match it? They match the 8% that you contributed. If you only contributed 1%, they're only going to match 1%. But if you put the full 8% in, they're going to match the 8%, meaning that at the end of the year, instead of having $8,000 in your 401k, you're going to actually have $16,000. How much of a tax deduction are you going to get? If you make $100,000 and you contribute $8,000 to your 401k, your tax deduction is $8,000. You don't get to deduct the company match, but you do get to deduct your contribution. That's why we call it a perfect investment. So back to Billy. Now he set it up and he said, okay, I'm going to be contributing. In this case, 11% is what he's contributing, but you do whatever your dream job, whatever the match is. And you're going to have to do a little research. Tell me what company you're working for. Tell me what their match is. Don't tell me something that you made up. do a little research. So that's number one. You got to set up the savings data card in your plan. But then you also have to go to the net worth section, and you'll see over here somewhere, if I go to investments, somewhere there's a 401k. So this is where Billy and Sally had to actually, they either linked their account, which they could do if you work for, let's say you work for, let's say that your company has a Fidelity account. Fidelity, I'm just going to, just whatever institution it's at, it could be Fidelity, it could be, I'm just looking at Fidelity, so there's lots of Fidelity. You would need to pick the one that it is. Fidelity could be, your company could be using Fidelity, and you would take your credentials and you would link that account. I know how some of you feel about linking accounts. You're petrified that that's not a secure way to do business online, and I get that. It's interesting, though. This tool, RightCapital, has bank level encryption, which is right up there with banks. So it's not, I wouldn't worry about it, but I know you might, so that's fine. Don't link your account. Instead, you could just add an investment account and you could plug in the total amount. You could call it whatever type of account. In this case, it's a 401k, and you would name it, name of your company. And here's the key thing. You have to put in a total balance, because remember, you just added the 401k savings data card saying this is how much I'm going to be contributing to my 401k starting now. And so your financial plan is going to be calculating that. That's great. But here is where you actually take the balance of your 401k account and you say, I have accumulated $125,000 over the last 10 years, or whatever you're going to say. In my 401k, now I have, let's say I have 125,000. Okay, great. Now you got to do asset allocation. And here's where you can select a model portfolio, or you can select your own asset allocation. I just want you to play around with this. I'm going to say if I'm a young person, I'm going to be aggressive, and I'm going to hit save, and that's going to save it. Now, I need to delete this account because it's fake. I just wanted to show you how to do that. So I'll come back, and I didn't save it. So let me see if I can go to the dashboard without saving it. Hopefully I did. But at any rate, I just showed you how to set up a 401k in your plan, because that is the perfect investment. Another thing I want to just highlight is, if I can get myself out of the way here. There we go. I'll put me little, and let me get rid of that so we can see. So these are the 4 investment strategies that I put a video in your playlist, so hopefully you watched that video. And there's lots of information in Money Study Group to give you, more detail about these 4 investment strategies. But they really are, in my opinion, if you want to become a really good investor, this is a great place to start. And I know from my experience in my own investments and becoming a millionaire by the time I was 50, which again is not the biggest goal on the planet, believe me, especially for you. To do the things I'm teaching you to do, the outcome, I say I can teach you how to become a millionaire by the time you're 50. And if you do the things I teach you in this course, it will happen. And it's not a huge goal. It's really not, because inflation is such that $1 million by the time you're 50 years old is not going to be a significant amount of money. Now, it may be significant to you, and it's certainly better than being buried in debt and not having any assets. It's a good goal, in other words, and I want you to achieve it. I just don't want you to think that's going to mean you can just live like, I just want you to know it's a good goal, but it's not a massive, huge goal. It really isn't. But these 4 investment strategies will really help accelerate your success toward that goal, I promise you. So the first one's diversification, and the story that I always tell, that hopefully you saw the video where I talk about the Enron investors. I worked with several folks who worked at Enron. And one person I worked with was very careful to diversify their 401k, and they didn't put all their money in Enron stock. Another one that I worked with, he put all of his money in Enron stock, and as Enron collapsed, leadership at Enron told the employees, there's never been a better time to invest in Enron. And so he put more into Enron. He lost everything. He ended up having a heart attack and dying broke. And his wife, who'd never worked, ended up having to go back to work. And that's where I got to know her. She worked with my wife as a teacher's aide. My wife was a teacher at the time. So those are 2 stories, 2 people, 2 families, 2 different approaches. One took advantage of this strategy to diversify, and it worked out well. The other one did not. They put all their eggs in one basket. In fact, the worst thing you can do is put all your eggs in the basket of the company that you work for. That's like the worst thing you can do, because you have everything's at risk if that company goes out of business, obviously, just like Enron. So diversification is something you should pay attention to. Don't let anybody talk you in to putting a lot of money into one thing. Diversify, spread it out. That's what this strategy is all about. The second one is asset allocation. And asset allocation is hands down the most important investment strategy there is, because asset allocation is the number one determinant of your portfolio's returns. Okay, that may be a mouthful. Let me repeat that. Asset allocation is the most important investment strategy because asset allocation is the number one determinant of the results of your portfolio. So asset allocation is different than diversification, although if you do good asset allocation, you will automatically already have your portfolio and your investments well diversified. But asset allocation is the strategic selection of asset classes across your portfolio. And so that's why I made you learn, and I want you to learn and spend more time understanding asset classes. So when you go into your financial plan, you're going to basically be doing some asset allocation. I want you to pay attention to the way that when you select a different asset allocation, whether you use the simple model approach, where you go from preservation to most aggressive, when you change those, just pay attention to the asset classes and how they change. Just pay attention to that, and you'll learn a lot. If you just pay attention while you're playing in your financial plan, you'll learn about asset allocation. It's very important. It's the number one determinant of your portfolio's returns. The next one, dollar cost averaging, in my opinion, is hands down the most powerful investment strategy for a young person who has a long time horizon, because dollar cost averaging, and I don't have Farmer Joe. When I teach this lesson, I talk about Farmer Joe. So I left a video in your playlist where I unpacked dollar cost averaging using Farmer Joe, who was buying cows. And it's a great story, a great illustration. But just trust me, what happens in the markets, in fact, let me just take a peek at the market today. Oh my, the market's up today a little bit. It was down, now it's up. Anyway, I was going to show you a chart. Let me see if I can find a chart. I'm going to find a chart. This is the SPY. Let me get rid of this and see if I can show you the SPY. Whoops, got the wrong one. So this is just a chart. This is SPY. It's my favorite. It is my favorite. Let me just do this. This is my little call to action. Boom. Yeah, subscribe to my new YouTube channel. Anyway, this is SPY. This is my favorite investment vehicle of all time. Hugely liquid. In other words, it's tons and tons of shares are sold each day. But this is SPY. You can see that chart is just up, 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 up. It's crazy. It's crazy. But there's going to come a day, and it's going to come soon, like in the next 6 months, I would bet you, that chart is going to look, it's going to be different. It's going to go down. And so if we looked at different asset classes, this SPY represents an ETF. That's an exchange-traded fund. That's an investment vehicle. An ETF, exchange-traded fund, which is what the SPY is. This one happens to reflect or be a proxy for, or it is a way to invest in the S&P 500, which is U.S. large cap stocks. That's an asset class. So SPY is an investment vehicle. It's an exchange traded fund. It's not a mutual fund. It's not an index fund. It's not a company stock. Those are 4 different investment vehicles. You can invest in an individual stock like Tesla. Let me just pull up Tesla. I've been investing in Tesla for a while. Oh, we get an advertisement. We always do. This is Tesla. So you can see that chart is painfully ugly if you're investing in Tesla because it's had a nasty pullback. That's a 6-month chart. If we look at a 2-year chart, look at how it goes up and down. Now, that's a company stock, and that's why you want to be careful investing in individual stocks because they go up and down a lot. But if you want to invest in something that's more diversified, like this SPY, which is my favorite investment of all time, because you put $1 in this and you get a piece of each and every one of the companies in the Standard & Poor's 500, the 500 largest U.S. companies, which is basically the largest companies in the world. Instead of buying each of those companies, you can buy this ETF, this exchange traded fund, which trades just like a stock. I can sell options on SPY just like a stock. I can buy it and sell it in the middle of the day at the price that it's at right now. It's not like a mutual fund. If you buy a mutual fund and you put your order in at 10 a.m. when the market's down 500 points, but let's say by the end of the day, the Fed comes out and makes an announcement and the market shoots up 2,000 points, and you put your order in at 10 a.m. because you wanted to buy that mutual fund at a discount, it doesn't work that way. You get end of day pricing on a mutual fund. So if I was buying an S&P 500 mutual fund, I couldn't buy it and sell it in the middle of the day. I certainly couldn't sell options on it to manage risk. But SPY, because it's an ETF, an exchange-traded fund, I can do all of those things. So for a professional money manager, ETFs, exchange-traded funds are way better. And there's thousands of them out there. This is my favorite, SPY, because it represents U.S. large cap stocks. Now, I could show you all different types of ETFs that represent different asset classes, and that's what I wanted you to think about and understand, because when we talk about asset allocation and dollar cost averaging, understanding asset classes is hugely important, because with dollar cost averaging, you are systematically setting up your investments so that you're buying different asset classes. And when you do that in a systematic way, you get to buy them at a discount when they drop. So if your 401k is set up to buy, say, Tesla stock, then over the last several months, you would have been buying more Tesla stock because you committed to $1 amount to invest in Tesla stock. Does that make sense? And if you're buying the large cap U.S. stocks, each month over the last several months, you would have bought in less because your dollar amount isn't going to buy near as much of SPY when it's priced at the moon. But if SPY pulls back, if it has a 30% pullback, your dollar cost averaging is going to be able to buy you more SPY when the price is down. So dollar cost averaging, again, in my opinion, is hands down the most powerful investment strategy for a young person with a long investment horizon it's going to make you money over time. So set it and kind of forget it until it comes time to rebalance your portfolio. So let me talk about that for a minute. So portfolio rebalancing just means you take your portfolio and let's say that you set up your assets so that you have just like a pie with 4 quadrants. Okay, just draw a circle and put 2 lines. So it's 4 pieces of pie with large cap, small cap, international, and bonds, U.S. government bonds. And let's say that's how you set up your 401k. But a year later, instead of it being 4 25% quadrants, let's say that now your S&P, your U.S. large cap stock, is taking up 50% of your portfolio. Time to rebalance. So when you hit the button to rebalance your portfolio, it will sell off that SPY. What will it buy? Let's say that you did have bonds as part of your portfolio. This is TLT. This represents 20-year government bonds. Excuse me. And so you can see that this is not done so well because interest rates, the Fed decided to raise interest rates, and the price of bonds are always inversely related to interest rates. So bonds got hammered. So your portfolio, the one with a circle with 4 quadrants, 25% was in bonds. And if this was the investment that you chose to purchase your bonds, you can see it's way down. So when you rebalance your portfolio, what's going to happen? What's going to happen? You started out with 25% in each quadrant, that circle with 4 pieces of pie, all of them were equal. But today, the U.S. large cap are taking up 50% and bonds are taking only, instead of 25%, they dropped so much that your portfolio is only 15% bonds today. But when you hit the button to rebalance your portfolio, it goes back to 25% in all 4 of those. So what happens is we sell off some of those U.S. large cap stocks. We sell off some of that SPY. And what do we do with the money? When we rebalance your portfolio, we buy into TLT because it's been trading at a big discount. So now we kind of load up on the one that's low. We buy low, we sell high, and we do that in an automatic way whenever we rebalance your portfolio. So those are the 4 investment strategies that are designed to help you maximize returns and minimize risk. And again, they work super duper well with the perfect investment. So those are the investment strategies that I like to use with new clients. They certainly in my own accounts, and they work in a number of ways depending on your age and your situation, but they're 4 investment strategies that are super helpful in all types of accounts. And they can help you, again, maximize returns and minimize risk. So that is the summary review of the last couple of weeks. And I hope that was helpful. And I really want you to be thinking about, let me get rid of this and go back here. Let me go, sorry about that. I want to see what I missed here. Just before I let you go, I'm going to check if my screen will refresh. So there we go. Any questions? If you got any questions, now would be a great time to ask them if you're in the Zoom room. I'm looking at the chat. So hopefully this week's assignment is not too challenging. Again, I'm not real critical when I grade these. I just want to see that you've played around with asset allocation. It's not difficult. Once you get into your plan, you'll see how to do that. And again, if you have questions as we move forward, don't forget about the capstone tutorial offer. I'll be happy to do that for you if you need help or you want to maximize the points on your capstone. But just be sure to send me the required information before you send me the request. And I would encourage you to start and group me. So I don't see any questions. I think I'm going to check one more thing here. Retirement Calculator and Asset Allocation. That's this week's lesson. That's this week's homework. So do we have the thinking man? Yeah, this is as always designed to make you think. So I hope this lecture, this lesson, this time together has been helpful, and I will see you next week. If you have any questions, again, feel free to ask those in the chat, or if you're watching on YouTube or Facebook, you're welcome to ask a question there. Leave a comment. I don't really answer questions in the comments, but I'm going to go ahead and jump on over to the live stream and hit the finish button